How's it going, everyone? It's Sam. I want to talk about something that Ark Invest is doing, and I've noticed it, and no one else that I've heard of has talked about it. And I think a lot of people don't have really access to the software that I have access to right now. Part of that's because I am on YouTube, but you can have the software too. It's not an affiliate or anything. It's just that it requires a certain membership. I'll explain that in a second. Again, I make nothing from talking about this website or anything, but it's an interesting website that I use in a lot of my Ark Invest videos. And you don't need the software to know what I'm going to explain to you. And I think it's something that we can take and use in our own investing. So if you guys like this, if you guys like the hustle, someone says that I should make that my catchphrase. If you like the hustle, blank afterwards. If you like the hustle, hit the like button. If you like the hustle, subscribe, something like that. It's 9 o'clock. It's Thursday night. There are other things I could be doing right now, but I wanted to talk about this because this stands out in my mind for something that I think is really important for a lot of people, especially a lot of newer investors, to see a major company doing this and putting this to action. So if you guys like this, if you like the hustle, hit the like button. I really appreciate that. We broke through 50,000 subs. Let's get to 55,000. I think we can do it. We're growing like crazy. If you guys want to see exactly when I'm buying and selling stocks, I have a video coming out tomorrow on the ones I did this week. But if you want to know in real time, you can check out the link down below to Patreon. We're just short of 1,100 Patreon members. You can join our Discord, see exactly what I'm buying and selling, talk with 1,100 other people. And if you want those 4 free stocks through WeBull, some people say that I talk about it too much, but you'd be surprised how many people still sign up every day to WeBull. Definitely check that out down below if you want 4 free stocks. Someone I heard of just got a Google share, so definitely check that out. So Ark Invest is what we're talking about today. If you don't know about Ark Invest, they are pretty well known because Kathy Wood, the one that runs Ark Invest, said a couple years ago, maybe it was just about a year ago, that she thought Tesla could go to 7,000 a share. Now, this is before the split. This is before that. So now Tesla is around $650 a share or so, which would mean that before the split, that would put them around 3,250, which still is far away from 7,000. She said that, I think, in 5 years or something, and now it's gone halfway there in just a year. But so many people thought that she was crazy. Some people had it at a pre-split target of like 100 or 200, and it was already at 1,000. Now it's at 3,000. So she's ahead of the curve. Her funds have done really well this year. I've talked about them a lot. They have gone up a lot. This is her most well-known fund, I believe, and it's gone just on the 1 year. So I'm not even picking out the best time. It's gone up from $50 a share up to $126 for 150% upside. If you had bought it right at the low on March 18 or so, you'd be up 260%. She believes in disruptive innovation, so companies that are disrupting their industry. And that sounds like one of those bad ads that you see on Facebook, like this little known company is disrupting a $3 billion industry. It's some like guys sitting in front of a brick building or something. But they actually are looking for those big companies that are disruptive. Now, something that I've noticed, I have access to Lucid Tracking. This is a website that looks at everything that they buy and sell. And the guys are really nice. The people that run this, they gave me access for free to it. You can definitely check it out if you want. Again, no affiliate of mine at all. I might work with them in the future, but right now, nothing there. It's just that they show all their different funds. They show what their daily buys, what they added. It shows how many shares they bought. It shows their daily sells. It shows their aggregates, how much they have, the top 20 daily shares added, their top new stocks or what stocks they bought for the first time and what stocks they dropped. So it's really useful if you're trying to get a sense of where they're going and what they're doing, how they're trying to be innovative. But I want to hit on something that I've noticed recently. So if you've heard of dollar cost averaging and you've tried to put that into practice, the thought is you buy in at equal amounts at equal times. However, some people do something that is a little bit different. So dollar cost averaging, they say, is really good. So that way you're not emotional. And I'll say this, Ark Invest does that for the most part, but some days they buy the dip. So that's another term, if you haven't heard of that, where you see a stock that goes down, you pick out why, or you figure out why it's going down, whether it's a valid reason for it to go down, and then you either say, okay, I'm going to sell it, I'm going to hold it, or I'm going to buy it. That's called buying the dip if you buy more. Ark Invest has started to do this, and you can see here. So this is a new feature, I think, on Lucid Tracking. They showed their shares as an aggregate versus the price of the stock. So this is really useful to spot trends. You can see that they're slowly adding, right? They started at 400,000. They slowly added to about 700,000. Then this stock, and I'll show you in a second what it is, went down 15% today, and they bought a ton of it. They added 1 million shares after they had about 822,000. And the reason the stock was down, I'll pull it up here. Motley Fool explains it. They had some news that typically considered good news, right? So the decline came after the company announced a deal with GlaxoSmithKline. So this is Surface Oncology that they own, to license its preclinical program for $85 million up front. So typically that's a good thing. They say that typically that's some good news when a biotech stock is able to license out one of their programs. Thing is, investors thought it was a little bit too low. They burned through about $16 million just last quarter, and this is about 1/5 of the company's pipeline. Whether you think that's bad or good, you can see here that obviously Ark Invest did not think it was bad. They bought a lot of shares, 1 million shares in one day because it fell. Now, this is something that I like to do too. So I dollar cost average, but the thing is, I always say this, if a stock goes down a lot and I don't think it's worth it falling that much, I'll put in more money. So I'll try to cut costs here to there. Luckily, I have pretty low expenses right now, and I'm saving money for a house. So sometimes I take a little bit of that house money and I throw it in to whatever stock I'm looking at. You can see this with another stock recently. So Teladoc, one of the companies that I really like, they were dollar cost averaging. Then it started to fall down. And you can see as soon as it started to fall, they bought a lot. Then it started to go up here and they started to level off. They bought a little bit, but then it fell down again. They added more. Then it stopped falling. It leveled off. Then it fell again. They bought more. Then it started rising. They leveled off. Then it fell more. They bumped a little bit up. And you can just see that over and over. It's amazing to see it just broken down. Every time it goes up, they level off. Every time it falls down, they buy more. And it just keeps on happening. Now, this is not true of every single stock. Some stocks, they buy significant amounts of just because they really like the company. Like this one, you can see that they bought kind of irregularly. The company didn't go down at all, and they still bought a lot more. And then some stocks, they just buy an equal amount of, like PSTG. Even though it's going up, they keep on buying more and more. It changes, but I like using this for myself, and I want to bring this to your attention because a lot of people don't understand. A lot of people are hard and fast one way or the other, right? They either always dollar cost average. They never hold a little bit of cash on the sidelines or put more money in if the market drops. And then a lot of people, and I've heard this more and more, and I don't like this necessarily either, they'll go all in to a few stocks and then pull everything out of the market. They'll go in and they'll pull everything out. And they're just looking to like bump it. Now, I believe in dollar cost averaging, but doing it in a way that you can put a little bit more, keeping a little bit of money on the sidelines, or just, living below your means. So that way, okay, you invested $2,000, your expenses are $2,000, let's say, or something. I know this is off for a lot of people, but then you have another $1,000 that you could use, and you see a stock fall and you just go and you buy it. So that's kind of what I like to do. But I want to bring this to your attention again. Like I said, I think it is something really interesting to take a look at. And I know a lot of people can't see this because they don't have this beta version of this website. Again, it's Lucid Tracking if you want to check it out. Also, if you guys want those free stocks through WeBull, definitely check it out. They're doing this for a couple more weeks. Also, if you want to see what I'm buying and what I'm selling in real time, you can check out the link down below to Patreon. Thank you for hitting the like button. Thank you for subscribing, and I will see you in the next video. Bye.